People are currently aware of many financial principles thanks to online searches, but a handy book is easier to adapt and follow. This begs the question of how to find the best investment advisor. The solution to this question is books. Books are a man's or woman's best friend, as you must have discovered at some point. Market pioneers have written books on their experiences, which are freely available online. Hello everyone, and welcome to a brand new video on the channel. Today we are going to talk about the top 10 books every investor should read. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. Number 10. Market Wizards by Jack Schwager. Over the last 3 decades, Jack Schwager has written 4 Market Wizards books, with a 5th due out in November 2020. Each book in the series is made up of a series of interviews with various fund managers and traders. Market Wizards depicts the characteristics that many of the finest traders and investors have. At the same time, it demonstrates that each of these successful traders has their own unique style. Fundamental analysis, market timing, and trend tracking are some of the ways. Some players concentrate on stocks, bonds, or currencies, while others are content to make money in any way they can, whether it is through currencies, the stock market, or the occasional gold investment. Because this book was produced in 1989, some of the ideas and techniques are somewhat antiquated, while many of the more fundamental principles remain applicable. Number 9. The Psychology of Money by Morgan Housel. This light rate takes the reader on a journey through 19 short chapters that explain the often strange ways that individuals think about money and the behavioral psychology that surrounds it before suggesting strategies to become more financially secure. Author Morgan Housel, for example, advises staying wealthy rather than becoming wealthy. To prove his case, he draws on the life and work of Berkshire Hathaway chairman and CEO Warren Buffett, who began investing as a child and simply enjoys making money, despite notably eschewing the modern trappings of riches. Number 8. The Behavior Gap by Carl Richards. The Behavior Gap is both a personal finance and a behavioral finance book. Carl Richards is a financial planner who created the book to highlight the financial blunders that people make. While not strictly an investment book, it does an excellent job of explaining how investors undermine their own investments. Richards refers to the behavior gap as the difference between investment returns and investor returns. In other words, as a result of their activities, investors frequently end up having poorer returns than the funds in which they invest. Number 7. Thinking Fast and Slow by Daniel Kahneman. Thinking Fast and Slow is one of the best investing books to read if you want to understand behavioral finance. Daniel Kahneman is a pioneer in behavioral economics and decision-making. He received the Nobel Memorial Prize in Economic Sciences in 2002 for his work on prospect theory. The book investigates how the human mind works when making decisions. Kahneman, in particular, illustrates how humans make judgments using 2 distinct cognitive systems. The first uses pattern recognition to quickly make automated or instinctive decisions. Number 6. Fooled by Randomness. One of the best financial books that isn't really about investing is Fooled by Randomness. Nassim Taleb popularized the term Black Swan in his subsequent book, The Black Swan, yet many consider this book to be a better book for investors. Fooled by Unpredictability is about the role of chance and unpredictability in life. It illustrates how, due to hindsight and survivorship bias, people frequently ascribe success to actions or behaviors when in fact. Number 5. Common Stocks and Uncommon Profits by Philip Fisher. Some of the most valuable financial books provide practical, common-sense investment advice. That is precisely what Common Stocks and Uncommon Profits aim to do. From 1931 through 1999, Philip Fisher was a successful money manager who owned his own organization. His work, first published in 1958, is as important today as it was then. The book emphasizes the importance of owning equities over time rather than attempting to time the market. It also provides advice on how to find the information you need to make investment decisions. Number 4. Reminiscences of a Stock Operator by Jesse Livermore. This should be one of the first books on the stock market that any investor or trader reads. While the movie follows a speculator's career, there are lessons for everyone participating in any market. The story takes place between the 1890s and the 1920s, during the early days of the stock market. It is written in the first person by Jesse Livermore, widely considered the greatest trader of all time. The book is fictional, yet it is based on true occurrences. Investing in stocks only became widespread just before the time period depicted in the story. While the market's dynamics have evolved dramatically, there is still plenty that hasn't changed. The article goes over the various traps that continue to catch traders. Jess Livermore went bankrupt multiple times, primarily due to excessive leverage. Insiders can also control stock values, according to the story. This is one of the best investing books to read if you want to understand timeless features of markets. Number 3. Rich Dad, Poor Dad by Robert Kiyosaki. The book Rich Dad, Poor Dad is about making your money work for you. It has something to do with investment and something to do with how we think about money and wealth. Kiyosaki compares the spending, saving, and investing habits of two people, one rich and one impoverished. Kiyosaki emphasizes in the book that poor people work for money, whereas successful people make money work for them. Rich people accumulate assets, while poor ones accumulate obligations. Compound interest works in both directions, depending on whether you are paying or receiving interest. Kiyosaki emphasizes the significance of diversifying one's income through real estate and dividend investing. Rich Dad, Poor Dad falls more into the personal finance category than the investing books category in many ways, but it is still worth a read. Number 2. One Up on Wall Street by John Rothschild and Peter Lynch. This book will also show you how to uncover undervalued firms that other investors are overlooking. He also offers stock selection tactics for finding companies you already know about. The argument is that there are many extremely profitable enterprises in corporate America that appear boring and uninteresting. Apart from swiftly growing and boring companies, the book also discusses dividend investment and investing in turnaround scenarios. It also looks at what investors should do in the event of a stock market crash. One step ahead of Wall Street. How to use what you already know to make money in the market is one of the most approachable stock investing books available. During the 1970s and 1980s, Peter Lynch oversaw some of the best-performing mutual funds. He wrote the book after retiring in 1989. The book is on almost every list of the top investing books. Number 1. The Intelligent Investor by Benjamin Graham. Warren Buffett considers The Intelligent Investor to be one of his best investing books, if not the best. Benjamin Graham, known as the father of value investing, published Security Analysis in 1934 and The Intelligent Investor in 1949. The first issue Graham emphasizes is that investors must distinguish between speculation and investing. The remainder of the book provides practical advice on valuing a firm, investing with a margin of safety, and capitalizing on Mr. Market's irrationality. That's a wrap on the video. I hope you liked it. If you did, let me know by giving it a thumbs up, and do not forget to subscribe. Thanks for watching. See you next time.